US stocks enter a bear market. NFP be the next deciding factor?
The US stock market officially entered a technical bear market this week. With Middle East tensions showing no signs of easing, the resulting energy crisis has sparked global panic, leaving market sentiment completely dominated by risk aversion. As we step into the start of the second quarter of 2026, DBG Markets takes 2 minutes to help you prepare for next week's critical battlegrounds. The absolute focal point for the market will be the US non-farm payrolls NFP report on next Friday. Currently, the market is watching the NFP not just to predict Fed policy, but to gauge whether the US labor market can hold up under the pressure of surging inflation risks. The logic is simple. If the jobs data comes in stronger than expected, it could relieve current market tensions and spark a relief rally for US equities. On the flip side, if the jobs data starts to crack, it could turn into a fresh nightmare for the US and even global markets. The second battleground for next week will undoubtedly be the progress of US-Syrian tensions. Following the recent oil shocks, any prolongation or further escalation of the conflict will keep the already fragile market nerves on edge. At the same time, you must continue to monitor the dual squeeze of energy and yields. Brent crude sitting firmly above the $100 mark is like a ticking time bomb for secondary inflation. As long as geopolitical tensions keep oil prices elevated, US Treasury yields will remain at painfully high levels. This deadly combination of high oil prices plus high interest rates will continue to put massive pressure on risk assets and keep a heavy ceiling over gold prices. If you are trading gold or major currency pairs, the bond market remains your ultimate leading indicator. To sum it up, we are walking into a brand new quarter with extremely high market stakes. Between Q2 portfolio rebalancing and Friday's NFP report, market volatility is set to explode. At this turning point, there is a high probability that the market will remain in risk-off mode, and risk assets will continue to face significant pressure in the short term. This is DBG Markets, keeping you ahead of the curve. See you next time.